Hey, what's up, guys? Welcome to GetRealValley.com. And today I have a very unique video that I think is going to help a lot of you guys who have been kind of thinking about and wondering what you would qualify for, but you've never really kind of wanted to ask, and maybe you can figure out on your own. So I'm going to go ahead and put together this video and show you guys a couple of different scenarios that you can plug in your information for and basically figure out whether or not you qualify for something that you might be potentially interested in. And then if that's the case, I'm going to show you guys exactly how to figure it out. And then if you do want to buy after that, then you can call me and be like, hey, you know what? I think I qualify for this much. I'm interested in buying something at that purchase price, and then we can make it work. So I'll jump right into it. Very basic case scenario. There's going to be a lot of things that can go differently that you might have questions about, but just the idea is to get an idea. The idea is to get an idea of what it is that you guys qualify for. So check this out. So we're gonna do a basic husband and wife. Okay. So we're gonna do a husband and wife. Okay. So we're gonna pretend that they are making 35. We're gonna pretend they're making $3,000 each a month. So let's do 3,000. Okay. 3K each. Okay. So that's how much they're making a month. Okay, so what we're going to do is, because they're husband and wife, or it doesn't really matter. I mean, it could be you and a partner, you and a best friend or something. That's okay. So as long as it's two people that are making 3K each. Okay, this is money, checks that they're getting from their companies. They get $1,500 every 2 weeks. So if you are making more or less, just plug in your numbers. Okay, follow me with this. All right, so we're going to go ahead and combine those incomes, all right, and it's going to be a total of 6K, okay, obviously, very basic math, 6K total income, okay? So now, the basic rule of thumb, now there's a couple different programs, which is FHA and conventional, and they have different ranges of how much they're able to qualify you for, how much of your income can they use. But for the sake of this video, we're going to do 50%, okay? So we're going to go ahead and divide this by 2, and that's going to give us 3K. Okay, so we are at 6K combined income and $3,000. That's the 50%. Okay, of what you can use. This is going to include your PITI, which is your principal, interest, taxes, and insurance, and your debt. Okay, so now we're gonna go ahead and do the math. Let's do a very basic case scenario. So let's go ahead and pretend that you guys, between both of you, you have a car. Husband and wife, one car. Let's hope that it's a low payment. Let's hope that it's $450, okay? So car, okay, $450, okay? Now let's also say that you guys have a couple credit cards, okay? Now let's say you're using the credit cards, but you're paying them off. You have a little bit of debt. There's maybe 1,000, 2,000. Maybe 5,000. It doesn't matter how much credit you have. The important part about the credit cards is going to be the actual minimum payment that's due every month. So when you look at your credit card bill, it always tells you your minimum payment due is $25, $35, $50, whatever it is. That's the number you want to grab. So we're going to pretend there's 3 credit cards, and each minimum payment is $25. Okay, so a total of 3 credit cards that you guys are paying, and it comes up to $75. So $75 in credit. All right. Another common thing could be student loans. Can be student loans, credit cards, car payments. Those are really the main ones. Anything else is unless they're an actual installment. Now, let me tell you guys something about the cars, okay? If it's a lease, you have to add it. If you're actually purchasing the car and you owe less than 10 months on that car, then there's a good chance that you don't have to use that debt. Now, the good thing about a car payment is that you owe a certain amount of months. So if you pay down to 10 months, because maybe you owe 14 months in that car, then you can technically pay that down to 10 months, and then that debt will not count against you, and you don't have to add it to here. You can leave, just don't have to do the math. So, but let's just pretend that you just got the car, you owe 2 years on it. It's $450. You have credit cards, 3 of them or 4 of them, and they add up to $75 minimum payment, and that's it. Let's just say that's the end of it. Now, if you do have more debt, add it to here. Just plug it in. Okay. So let's do the math now. So 450 and 75. That's gonna come out to $525, right? So total of 525. I don't know why I made the math so hard for myself. But okay, it's $3,000 minus 525. If it was 500, it'll be 2,500 plus 25 more is 475. So let's just say 475 minus this is going to be $2,475. So $2,475. And if the math is wrong, I'm sorry. Okay, so now this, okay, this $24,475, it is the total amount of money that the bank will let you borrow for all of your debt and your PITI, principal, interest, taxes, and insurance. Okay, so now once you figure that number out, now you gotta call me, text me, or just use this video. And here's what we're gonna do. We're gonna go ahead and bring down the mortgage on Zillow. Okay, Zillow Mortgage. Okay. Yeah, I can't really see that. All right, there we go. So Zillow Mortgage. Okay, we're gonna go ahead and go to payment calculator. Okay. So here's what we're gonna do with the payment calculator, and I'll show you guys real quick. So this is something we're gonna adjust. Now this is where you're gonna go ahead and determine the type of down payment that you have. Okay. At the very minimum, you always have to put 3.5%. That's the minimum. You can go up on the percentage of your down payment, but you cannot go below 3.5. So that's going to be the second bar right here on down payment, okay? So that's purchase price, down payment. This is going to be your interest rate. For the sake of this interest rate, always just use 5.275. Now, if you have a little bit better credit score, anything over 740, use 5% right now. If you have in the 600s, just use 5.275, maybe even 5.5. Play it safe. Just trying to get an idea of what you qualify for. Okay, so you see the number right here in the middle? That is your number that needs to stay below the 2475 that we came to a conclusion of. Okay, so now what you need to do is play with these numbers. Okay, so I'm going to try to figure out what 2475 looks like. So I'm going to go ahead and put purchase price. Let's say 450. Let's try 450. Okay, sometimes it's easy to just type it in, because I don't know why. 450, and then we're gonna go ahead and put a down payment. Let's say I saved some money. I have 10% down. Okay, so let's say this couple has saved $45,000. The interest rate is gonna be 5.25 because 5.375 because they have somewhere around the 650 range on credit score. And then that's going to be it. Now, if you're anywhere in the 400s, okay, you have to understand that there's most likely, unless you're going to Palmdale or out of the area, you're going to end up with a condo or a townhome. And if that's the case, you need to add HOA, which is also included in that payment. So the HOA, to play it safe, you're going to go 300. Okay? 325 plays it even safer. So here we go. Now, this is where it gets fun, right? Remember, you have $75 of credit card debt over there and a $450 car payment. So so as you can see here, I'm at $25.35. Now, we're only allowed to do $24.75. Now, this purchase price is $350, 10% down, which comes out to $35,000. Interest rate of 5%, and I'm at $25.35. If we get rid of those credit card debts of $75, now we're qualified for $2,550, which allows us to qualify for this loan here. That would mean that we can buy $350 purchase price, 10% down, $35,000, an interest rate of 5%, and an HOA of $325, which is down here, right there. $325 HOA. So with that said and done, a partnership that each of you make $3,000 each. Okay. Now, if you make more money, then plug in 4,000 or plug in 5,000 or whatever the case is. Or if it's less, plug in less. Both of you guys make $3,000 each. Okay. Total is 6,000. Divide that by 2 is 3,000. You have a car payment of $450. That's why a car payment sucks, because that's $450 that completely goes out the door of your purchase power. Credit card is 75, which hopefully we're going to pay off so we don't have that debt. That comes up to 2,475. Minus 75, that's 200, 550. And with the numbers I just ran, you can buy something for 350. 350, you can purchase a nice condo, even a townhome, where, I mean, if you think about it, for $2,500, that's probably what it's going to cost you to rent that anyways. Maybe $2,200. Maybe you find something for $2,000. But remember this, those $2,500, okay, every time you make that payment, you're going to pay down your mortgage. Every time the market goes up, your equity is going to go up. So you're paying down the mortgage, your equity is going up. So those $2,500 are going into a future savings account. So technically, paying $2,500 for that $350,000 condo or townhome, including the HOA, it's going to be a lot cheaper than $2,000 of rent, because those $500 are going to savings that later in the future it's going to be in your equity. So guys, this is a very basic case scenario. Now, imagine adding a third person. Maybe you guys just want to invest in a 3-bedroom with 3 different people and you both make $3,000. You're going to be able to do this with flying colors. And $2,500 between 3 people, do the math, it's much better than rent. It's much better than rent. So I'll leave you guys with that. Plug in the numbers and go ahead and tell me what you think you qualify for. There's little things here and there, of course. Credit is going to determine your interest rate. It might change your DTI a little bit, your debt to income ratio. But this is it. It's as simple as it is. Let me know where you're at. If you need to pay off some stuff off so you can have a better purchase power. If you like where your purchase power is at, then great. If not, you can always either make more money, you can have less debt. Imagine removing that car payment. Automatically, you qualify for probably a $450,000 to $500,000 purchase price. And I'm sure you can take good advantage of that. So I hope this helps. Let me know what you guys think. See you guys next time.